Welcome, deep divers. Okay, today we're diving headfirst into, well, what really feels like a seismic shift in the crypto market.
It really does.
We're seeing just unprecedented levels of institutional money flooding into digital assets.
Yeah.
So our mission today is to unpack three major stories, three developments that signal, pretty loudly I think, the start of a whole new era in crypto investing. Okay, let's unpack this.
What's fascinating here is, you're right, these aren't just passing trends. We're talking about developments that fundamentally reshape crypto's role. It's moving away from being purely speculative.
Right.
And becoming, a standard professional portfolio component. It's a real reevaluation.
A standard component. Okay, so where's the biggest splash from this institutional wave? First up.
Well, it has to be the Bitcoin ETFs.
Right. Without a doubt. I mean, look at these stats.
Yeah.
An absolutely astronomical $49 billion in cumulative net inflows.
$49 billion.
In just the first 6 months of 2025.
Yeah.
That's apparently the fastest institutional adoption of any financial product in modern history.
It's incredible speed.
And total net assets hit $134.11 billion by June 30th. That's what? 6.27% of Bitcoin's entire market capitalization.
Think about that, over 6%.
And you see players like BlackRock's iBuy fund just dominating, holding what was the latest? 18,476 BTC.
Yeah, massive numbers.
So what does this tell us about the nature of these investments? Is it just quick money, or is this something, more fundamental?
That's the key question. And the answer seems to be it's fundamental. These are calculated long-term investment strategies. We're talking sophisticated institutional players here.
Okay.
They're viewing Bitcoin as a permanent portfolio allocation now.
Permanent, not just a trade.
Exactly. And the sustained nature of these inflows month after month, it creates these really powerful supply dynamics. Essentially, all this Bitcoin is being bought up and moved into long-term holdings.
They get off the market.
Right, effectively removing it from circulation, which creates, structural price support that just wasn't there before.
Interesting. Okay, but it's not just the ETFs, right?
Not at all.
Here's where it gets really interesting. Corporate Bitcoin holdings. Get this. The number of companies holding Bitcoin on their balance sheets.
Yeah.
It jumped from 64 companies in 2024 to 151 companies in mid-2025.
Wow, more than double.
That's a 135% increase in basically a year. What does that say about corporate America's confidence?
Well, it says they're not just experimenting anymore. This isn't a trial run. Companies are really going all in. And part of that seems driven by stronger U.S. government policy support, giving them more clarity.
Okay, so policy helps. But what's the financial logic for them?
They're starting to view Bitcoin as a legitimate hedge against currency debasement, sort of like digital gold reserves,
Hacking the balance sheet.
Exactly, protecting against inflation, a weakening dollar. It's a strategic treasury move now. And this corporate accumulation, it creates what people are calling diamond hands behavior.
Meaning they're holding tight.
Holding tight, they're not trading it. They're taking huge amounts off the liquid market, which again, reduces supply and establishes these really strong price floors. Plus, every big company that jumps in creates this, network effect. It encourages others.
Right, a snowball effect. Okay, so we have Bitcoin ETFs booming, corporates piling in. What's the third piece?
Ethereum ETFs. They kind of flew under the radar compared to Bitcoin, but it's significant.
Right, so Ethereum ETFs saw, $2.9 billion in inflows during 2025?
Yep, and recent data showed over 93,000 ETH flowing in weekly at one point.
Okay, so decent numbers. But what's Ethereum's unique appeal for institutions compared to Bitcoin? Why ETH?
It really comes down to utility. Bitcoin is seen more as that store of value, the digital gold. Ethereum, it's the backbone for so much more. DeFi, NFTs, all these emerging blockchain applications run on it.
The infrastructure layer.
Precisely. And a big driver recently was the Pectra upgrade implementation back in June.
Ah, the check upgrade.
Yeah, it significantly boosted its capabilities, its scalability, and that directly drove renewed demand for ETH. We even saw the supply on exchanges drop down to around 17.1 million tokens. People are holding it, maybe staking it. So this raises an important question. As traditional finance gets more comfortable with smart contracts, with programmable money,
which is Ethereum's whole thing.
Exactly. Could Ethereum's institutional adoption actually accelerate even faster than Bitcoin's down the line? It's possible.
Fascinating. So let's pull back. We've got record Bitcoin ETF flows, exploding corporate adoption, and now Ethereum's institutional breakthrough.
It's a trifecta.
It really feels like the most significant institutional adoption wave crypto has ever seen. It signals that shift, like you said, from speculative asset.
To standard professional portfolio component.
Right. So what does this all mean for you listening right now? For the individual investor,
Right.
it seems like it creates both massive opportunity, obviously, but also, increased competition, right? You're swimming with bigger fish now.
That's exactly it. What we're witnessing is professional money fundamentally reshaping the market dynamics permanently. The landscape is changing fast. And understanding these shifts, it isn't just insightful anymore. It's absolutely key if you want to navigate this new era successfully, something to really mull over.